There's one thing that investors can do right now to completely change the outcome of the bear market for their own personal financial world, and I believe this to the core of my body. Today, I'm going to be teaching you the one thing that is going to make the biggest net difference to your portfolio over the course of the bear market, which we're in right now, and how the smartest investors can use this particular technique to maximize their results on the other side of the bear market. This stuff is absolutely required viewing. In addition to this technique, we're also going to be forecasting the ultimate bottom of this crypto bear market and putting these things together to help create a formula for absolutely crushing this market when it does come back to life in the next few weeks, maybe the next few months, maybe even the next few years. But I'll be using these techniques day in and day out to absolutely crush it on a personal level. And I sincerely believe that this is the one skill set that everyone should be focused on and taking this particular moment in time to master, because there is no time like the present for this particular set of skills. If you're excited for this one, absolutely destroy that like button, smash it to bits. As always, I'm EllioTrades, and let's dive in. So what's the most important thing to do right now to maximize your success during the bear, to curb losses, and to absolutely crush it? Well, everything in this entire market for the next few months is you against you. It's all about controlling your emotions. As you can see from this tweet here, Tor explains, in a bear market, loss aversion is a mind killer. The only way out is through. Build greater than the value you think you lost. You might find you have not lost anything at all. Now, emotions and controlling your emotions is the entire topic of this video, and we're going to combine it with some forecasting and some data-driven analysis to understand where we think the bottom might be and how we can control our emotions to actually extract max value from that prediction, because it's not so simple as buying in at the bottom. You need to be prepared to hold those coins through some pretty choppy waters. Now, emotions aren't just something that affects you. In fact, every single market, whether it's stocks, commodities, bonds, crypto, oil, beanie babies, you name it, all markets typically follow the same boom-bust cycles over long enough periods of time. Now, the reason why this is super relevant is because there's only one common ingredient between all markets in the world. It's you and me. We're all humans, and we all are super susceptible to our emotions. And if you've been in crypto for more than a few minutes, you know that there's nothing that makes you want to hit the buy button faster than some FOMO. Just like there's nothing that will make you want to hit that sell button faster than some FUD. Fear of missing out, fear, uncertainty, and doubt. These are the two fear-based emotions that drive the majority of market actions. And that's why emotions, understanding them and learning to control them, is the absolute key to outsmarting this particular cycle. Because on the way up, learning to take profits and taking money out of something that's making you so much money is an extremely hard thing to do, just like buying into something that's eviscerating wealth towards the bottom is something super hard to do. But the more that you learn to control your emotions, the more you'll be able to counter trade the emotion of the market and actually make smart buys at the lows and smart sells at the highs. Controlling emotion is the name of the game. So how can we control our emotions here in Q2 of the bear market of 2022? Well, let me tell you a few simple steps that you can take right now to begin controlling your emotions. Now, the first thing is to swallow all the hard to swallow pills right now. Do not sugarcoat things in your mind. Do not tell yourself stories. Try to cope with realities, not fiction. And that means, first and foremost, getting over this initial shock. The initial shock of flipping from a bull market to a bear market can wear down even the most experienced, even the most hardcore believers in cryptocurrency. Another part of getting over the initial shock is releasing any and all emotional connection that you have to that number that was your all-time high. Whatever your portfolio reached in your head, remember, that number was a thing of fiction, because nobody sells it all at the top. You will never have ever taken out the full amount of your all-time high. In fact, even taking out a majority of that all-time high is unrealistic, because people always double down in bull markets in crypto, especially towards the end. And when there's a big crash after parabolic moves, most people buy more instead of actually risking it all off. So just know that all-time high number is a thing of fiction. It never existed, and you should never think about it. In fact, I found that when calculating my own personal all-time high, I tend to round up as well. Say I have 90K in my portfolio. Well, I'm thinking to myself, wow, I got 100K. That's not even real. I've now rounded up. And by the time the markets crash, crashed, I'm there thinking about $100,000 when in reality, the max I would have probably taken out, even if it was at 100K, would be maybe 20 or 30. And of that, there's probably a ton of profits and taxes in that. So what am I really left with at the end of the day if I would have made a huge sell towards that 90K all-time high? The reality is far different than the fiction you tell yourself. So getting away from that fiction and closer to reality is what you need to do to control your emotions. Sitting there and thinking about your all-time high is about as useful as sitting around and thinking about the tooth fairy. The reality is that you should let this number completely go and focus on where your portfolio is at today and where you think the market is going tomorrow. Because if you don't check your emotions, you'll end up a victim of the market cycle psychology. And that is, of course, where impatient and more emotional investors panic sell and take the most risk off towards the bottom, whereas the smart investors put the most risk on towards the bottom and take the most risk off towards the top. If you can't control your emotions, you will end up statistic cycle after cycle. I know personally, I talked about it nonstop on my channel. Hey, we're going to ride the bull market, but everyone needs to take profits towards the end of 2021, or else, you'll go down to Goblin Town, you'll have nothing left. And the problem is that it's so much easier said than done. And I'm actually pretty shocked, and I will share with you that so many brilliant and incredible visionary investors and participants in crypto that I know personally got completely wrecked because they did not take profits, they did not risk manage, and when the music truly stopped, they were not prepared, despite the fact that most of these investors know the rules, they know how to play the game, and they were still completely broken by this bear cycle. Remember, controlling your emotions stops you from doing dumb things. Controlling your emotions means taking profits and being happy about it in the bull market, even if those assets continue to go up. And of course, controlling your emotions means not revenge trading during the bear market, trying to make it all back and taking on more and more incremental risk in the process. That's the way that you see the market gradually relieve you of all of your capital. Another huge tip here is to spend this time understanding that there's no rush. There's no gun to your head. And in fact, these things can take quite a while to play out. Thus, the best thing that you can do is start planning your own world. Start planning how your life looks, how your investment world looks, how your professional world looks over the coming months and years. You now have the luxury of time for the first time in quite a while to actually plan stuff out. The people who make plans and follow them in the bear market are often the most successful builders and investors in the space. So take some time and plan yourself out. Do you want to be full-time crypto on the next bull run? Do you want to find a job in Web3? Do you want to create your own first collection in NFTs? Whatever your goals are, make plans, stick to them, and you will have a much better time through this bear market than people who are constantly looking at the charts like a daily horoscope from hell. Now, we know that finance and financial problems cause the vast majority of stress and mental health issues across families in America and most likely the world at large. So that means that as finances get more and more tricky, more and more sticky, mental health becomes a more significant issue. Now, I can speak from experience as someone who's been through all kinds of ups and downs in crypto. And even at the highs of the bull market, the pressure was overwhelming for me at times. And taking time to focus on my mental health, on fitness, which has been a huge priority for me in 2022. You may have noticed this. I appreciate all the kind words. But the reality is that this stuff is having a real and dramatic impact on myself, keeping me calm, helping me plan, and the ability to have mental space to make good decisions is utterly critical. Without focusing on your mental health, without focusing on your physical well-being, part of mental health, you will not be able to make good decisions under stressful conditions. And the bear market is stressful. And the thing you need most of all is to have clear and calculated decision-making processes, or you will fall victim to the emotional cycle that is the market. Now, to summarize this very well, Flood explains bear markets are for mental health and fitness maximalism. Again, this type of maximalism is very, very good. Focus on your body. Focus on your mind, focus on your relationships, and, proverbially touch some grass, whatever. The point is, don't just spend all day locked into a stress cycle, focusing on charts that have predictably underwhelming results for the next few weeks, months. There's absolutely no reason why you should be spending all day focusing on something that's probably not going to make you feel better. Now let's get to the important stuff, because after you've touched grass and focused on your mental health, understood your own emotions, and learned to control them, which is the number one point of this video, learning to control your emotions, it's time to realize that bear markets are where real fortunes are made, and this is the real championship innings, where the real winners take their crowns. This is a huge opportunity. As Pomp says here, fortunes are made in the bear market, not the bull market. And if you play the bear market correctly, you will not be overwhelmed with FOMO when the newest random altcoins come on during the next bull cycle, because you'll be chilling on your bags, watching your wealth multiply, and not really worrying about missing trains because you've already set yourself up for the next move of the market. And so what is that next move of the market? Today, we're going to be talking about an article put out yesterday by Arthur Hayes called Shut It Down. Again, Hayes has been crushing the crypto predictions since the Fed pivot in November. And Arthur Hayes' analysis in this particular article gives me hope that we might actually be pretty close to the lows. But the problem is, even though we might know that, even though that might be true, most people will still fail to actually play this particular bear market correctly. Let's go through why Arthur thinks the lows might be in, and also why this period will be so hard for so many investors. So honestly, you should read this whole article. You should read all of the articles that Hayes has put out over the last few months. Not saying every single point should be treated as gospel, but they're amazing thought experiments for you to learn from. You should always be trying to use as many thought experiments from leaders of the industry as you can to gain more perspective. It's certainly something that I do each and every day, and that's helpful to me. And that's why through my content, I try to give people mental models more than actual sort of end results, meaning instead of, hey, I like this coin, hey, I like coins like this, and that way people can also find other coins that fit that model. Like when we talked about layer 2s that will have airdrops, and we just got the Optimism airdrop, which was even better than the Uniswap airdrop if you guys took advantage of that free money opportunity. Again, that's an aside, so let's dive in. Arthur Hayes says his bottom checklist is that Bitcoin and Ether start moving increasingly in a less correlated fashion versus the NASDAQ 100. We've seen the first signs of decorrelation since the COVID drop of March 2020, and that's super, super bullish. Second, that current price levels are very close to the previous cycle's all-time highs. Definitely a checkbox there. We see that we're about 30% or so above the prior cycle's all-time highs of 20K. We hit about 26K, so we're about 6K over the prior all-time high, not a huge amount of wiggle room there. And usually coming down to the prior cycle's all-time high is expected to be the ultimate low of any bear market, right? And finally, the mainstream financial media gloats about how stupid and greedy plebs were who attained short-lived wealth during the bull market in crypto. We know all of the articles across mainstream media right now are celebrating the absolute death of NFTs, the complete irresponsibility of meme coins, the absolute smoke and mirrors of DeFi and Luna. And of course, what is Ethereum even good for now that NFTs and DeFi are dying? We see media dancing on the graves of the crypto evangelists, and that is a great sign that we are in more of a buying season than a selling season. It's generally accepted trading wisdom that whatever CNBC says to do, you should do the opposite. And that's something that you can see here Hayes agrees with. Now, what Hayes argues here is that this Luna collapse and the fact that they tried to sell 80,000 physical Bitcoin, not futures or options, but actually selling on spot markets 80,000 Bitcoin and doing so in short order is actually a way that we've seen the ultimate clearing price for Bitcoin during the bear market very rapidly. In fact, he says to puke 80,000 physical Bitcoin is quite a feat. After contemplating the nature in which these Bitcoins were sold, I'm even more confident that 25 to 27K is for Bitcoin this cycle's bottom. Now, of course, we wicked down there, but does that mean that the game is over, that we've had our lows, and that we just grow up, up, and away? No, this is where controlling your emotions comes into play, because even if you agree with Hayes, which I would like to believe, though I still think there's danger of going closer to the previous all-time high, long term, I do think that the 20,000s range for Bitcoin is certainly a value play. If we think years down the line, if you're on the same boat as me of believing in the $1 million Bitcoin, then of course a 20K Bitcoin compared to $1 million is still cheap long term. But the question is, will you be able to hold that Bitcoin long term? Will you actually buy and not sell? Will you be able to keep the incredible riches which you're owed for your incredible bear market buys? As Hayes explains here, while the bottom is in, he hopes, it doesn't mean that prices just automatically resume their path back up to Valhalla. In fact, the market will stage impressive bear market rallies that traders nursing massive losses, again, I'm telling you, tons and tons of traders are sitting on mega losses. People who you would not expect to have traded this so irresponsibly. But right now, many traders are sitting on positions that are down 50 to 90%. Those traders are in loss reduction mindset. They want to exit at a less bad price. They are not mentally primed to ship more capital in at these bargain prices. Therefore, any rally will be sold into until the underbrush of the forest is clear and the diamond-headed apes can emerge safely from hibernation. This is the most important part, is that we still have time before the market can reset, before the psychology can reset, and before macroeconomic and political conditions can reset. Now, it's generally perceived that inflation is only hurting or mostly hurting the lower income people in the world, but the reality is that the death of asset markets is hurting the most important voting bloc in the country, which is, of course, the baby boomers. Not only are they the wealthiest generation, they're the most important voting bloc. They own a large percentage of global financial assets and are now embarking on retirement, which means subsisting on fixed income, largely subsidized by stock market gains over decades. Poorly performing financial assets and rising fuel and food inflation are the two worst things a financial asset-heavy retiree can experience, especially happening together. So you have the most important voting bloc, the baby boomers, looking at the situation today and saying, oh, hell no, meaning that they will be willing to change whatever's going on because their fixed income, financial asset-based retirement is currently looking like it's got holes in it. And there's nothing that a 60-something or 70-something-year-old person looking at retirement wants to see less than a potential threat to their ability to eat and live as an elderly person. So what does it all mean? It means that there will be an about face from the Fed. This cannot go on forever. They cannot just crush risk assets forever without a significant change to the voting populace's wishes. And eventually what the voters want will be reflected by politicians, and those politicians will put pressure on the Fed to change policy. It all means that eventually we're going to see a major about face from the Fed. And to be very clear and quote Arthur Hayes, the Fed will not be coy about its about face. The Fed pivot will be clearly telegraphed, and those waiting for the signal that it's on like Donkey Kong will receive it. For patient traders whose time frame spans many years, it pays to wait. You don't have to sell filthy fiat to buy Bitcoin and Ether early on, only to get shook due to lack of confidence in your investment thesis. This is what it's all about when it comes to controlling your emotions. The reality is that while the bottom might be in, while the lows might be in, so many people might rush in, buy, see relief rallies, then crashes back down to the lows, get shook, and sell again. This means that you've taken your incredible action of buying the lows and thrown it away because you've done it too early and you've not waited for the all clear. What Arthur Hayes is saying here is that he says it's best to wait for the Fed pivot. The reality is that if you're looking at $1 million Bitcoin, does it really matter whether you bought at 28K or 35K or even 42K after the Fed clearly pivots? The point is that once the Fed pivot does occur, it will be, to quote Arthur, on like Donkey Kong. The most important thing you can do in a bear market is learn to control your emotions. Your emotions will cause you to be completely fudded out at the bottom and to spend way too much at the top. Controlling those emotions, focusing on mental health, and reviewing your long-term plan for your investment thesis is absolutely critical. Build stuff, learn stuff, work out, make yourself better, and prepare for a long ride. Because as Arthur says, even if you jump in with a brilliant buy at exactly the cycle's lows, you may very well be shaken out by some new moves in the market if you're not actually prepared to ride the stuff for years at a time. In fact, for most people, the easy mode way to play this is just to wait for the Fed pivot. I personally see that coming in late summer, Q3, maybe even Q4, right as we're coming into election season. But the reality is that it is coming because the combination of inflation and the absolute degradation of public asset markets is a toxic mix for the most important voting bloc in the world, which is the baby boomers. And if they can't do anything meaningful for inflation, it is easy enough for the Fed to make a temporary pivot and stimulate markets. What I'm trying to say here is I can't logic around the Fed not making some kind of pivot in the not too distant future. Exactly when that happens is anyone's guess, but the Fed, as Arthur says, will not be coy. This message will be obvious, and the people who manage their emotions and prepare for that moment, I believe, will set themselves up for a path to sustainable wealth creation in the new market cycle, which in my opinion inevitably points to a more digital, crypto-native future, one in which Bitcoin eventually reaches $1 million, Ethereum to some astronomically high value, metaverse and crypto gaming go berserk, and NFTs are the most prized possessions in the world. I believe that that is the world we're headed towards, and for that reason, I'm looking to deploy each and every tip I've put out here in this video today to make myself the best possible long-term investor during this bear cycle. If you got some value out of this video, make sure you destroy that like button, and of course, if you want more videos like this, make sure you subscribe, as we're trying to get content out each and every day that enriches the audience and helps them pivot around the crazy new world of crypto. As always, I'm EllioTrades. You can find me on Twitter at EllioTrades, and I'll see you very soon on the next episode.